Hello, everybody. Welcome. I hope you had a great week and that we are pursuing our dreams and achieving our dreams accordingly. You can share the live with your friends and you can invite somebody. If you have any questions that are relevant to what we'll be talking about this afternoon, you can post them in the comment section. And if you have any comments that are also relevant, we appreciate your participation. It encourages us. So yes, type in something, but as long as it's relevant to what we are doing this afternoon, we appreciate. Today we are talking about the magic of asymmetrical risk in the creation of wealth. This may sound like a very complicated topic. I know some people have asked me what the topic means, but it isn't really. Asymmetrical risk is the concept of taking a risk that will produce a return that far surpasses the risk taken. In everyday life, asymmetrical risk is all about about finding situations where the downside is limited or manageable, but the potential upside is significant. Whether it's in your career, personal development, your personal relationships, financial decisions, applying the principles of asymmetrical risk can help you maximize opportunities while minimizing exposure to harm. In this talk with Themba, we will present some real-life examples of asymmetrical risk in various areas of life where people have experienced limited downside with significant upside potential. And once you master these concepts, you create wealth in a very leveraged manner. I remember the last presentation, we're talking about how to leverage. So yeah, Themba, do you have any news from this past week for our viewers?
I'm so much looking forward to the discussion on asymmetrical risk. But let's just talk about some news that I have picked up, which may be relevant to our viewers. Let's just start with an economic update, Tafadzwa. We always encourage our viewers to be in touch with what is happening in the economic world, because those events will impact on our income, it will impact on our ability to create wealth. So let's start with an economic update. Tafadzwa, the Federal Reserve in America will be meeting in this coming week, and the consensus is that they are likely to lower rates by 25 basis points. 25 basis points simply means they are likely to lower interest rates by 0.25%. And the consensus view is also that in their next 3 meetings, they will be lowering rates by 0.25%. So what does that mean to us? It means to us that globally, in most economies around the globe, we have reached the top of the interest rate hiking cycle. And it's most likely that interest rates will come out, especially given the fact that inflation has also come down. If I look at what is happening in the global economy, especially as far as personal wealth creation is concerned, I think there are basically 3 broad themes, Tafadzwa. Interest rates will be coming down, inflation is low, but credit card debt and unsecured lending is very high, probably at its highest. What that means is that generally it doesn't matter where you look, households seem to be very stressed. People are drowning in debt out there. If I go and look at what is happening in South Africa, there was a newspaper report this past week that average inflation expectations for the next 2 years are coming down. What that means is that even the central bank in South Africa is likely also to lower interest rates, and they will be meeting this September. There was a news report yesterday that one of the rating agencies, Fitch, has kept South Africa on a stable outlook because they are very encouraged with what has been happening on the Government of National Unity front, but they are also concerned about some policies which the government is implementing. So what that means is that, because these rating agencies rate economies in terms of their ability to pay on the debt that they have issued. So what that means is that generally in South Africa, investors are quite positive about the short-term prospects of the economy, especially given the Government of National Unity and what they've been able to achieve so far. So that was just a brief economic update. Let's just go into specific news. In this particular week, and this is a South African specific report, Tafadzo, I always watch reports, presentations by banking institutions, because they give me an insight into the finances of households in terms of what is happening to households. So this past week, FirstRand, which is the holding company of FNB Bank, published their results. And one of the things that they mentioned in their results presentation was that they were really concerned about the increasing debt review book. In other words, many of their consumers are actually filing for debt review, which further cements the view that households are under stress. But one of the concerns that they expressed is that some of these debt review practitioners are targeting your more active, higher income customers who are really not in debt distress. What that means to all of us is that before you file for debt review, just do your homework, talk to somebody who can advise you appropriately, because some of the advice by debt review practitioners out there asking you to file for debt review is not solid advice at all. In other words, they just want to get fees out of it, and it's not going to benefit you. So one of the statements that FNB Bank said is that in many instances, customers are entering into debt canceling arrangement without any arrears at all. And they have actually resolved to monitor the trend very closely and to implement educational programs aimed at educating consumers about the downside of entering into these debt review arrangements. So the figure that they mentioned in the report is that their debt review book was up by 17%. Now, this thing of customers probably entering into debt review on the basis of advice which is not solid is not something that FNB Bank is saying. Other two banks have also said the same thing. So there was Capitec, which also said the same thing. They noticed that 20% of consumers exit the debt canceling arrangements after 12 months, but they would have paid fees, and they would not have had results in terms of their levels of indebtedness. In this particular week, in this past week, Nedbank also sent a WhatsApp to their customers asking them to contact their bank first before making any decisions about entering into debt review. I guess there are two takeaways for all of us. Number one, before you enter into a debt review arrangement, talk to your bank first. They may actually have arrangements which may benefit you in terms of your indebtedness. So that's the first takeaway. The second takeaway is that understand the fees that you're likely going to pay and what the implications are in terms of entering into that debt canceling arrangement, because it may not be beneficial for you. The third thing that I would want to mention is that Tafazo, we've been talking about this. With effect from the 1st of September, the two-pot retirement system in South Africa was implemented. So I will not explain what that is all about, but it's essentially an arrangement which allows everyone that is contributing to a pension fund to have access to 1/3 of their savings. So on a yearly basis, the law is such that you can access, that. So I've been monitoring developments that have been happening since this two-pot retirement system has been introduced. The first thing that I have noticed is that a number of people are complaining about the tax that is payable um, on the redemptions of their pensions or on the applications. So just be aware that there is tax that is payable whenever you decide to access your savings on the pension fund arrangement. The second thing is that some of the pension fund companies have actually recorded record redemptions. So, for example, Alexander Forbes issued a statement saying that they were processing something like 78,000 claims in the first week of September since the two-pot system took effect. Ordinarily, they would process that amount of claims in a 6-month period, but they were just processing that in only a week. Sanlam Corporate also noticed the same trend. I think they gave a number of 20,000 claims in the first week of September. So there is no doubt that many people have gone in to claim in order to access the savings pot. I have no problems with that. We gave an advisory some weeks ago around this, and I will repeat the advisory again. If you are highly indebted, which seems to be the case anyway, globally, not only in South Africa, if you are highly indebted, go on and withdraw. But when you withdraw a portion of your retirement savings, make sure that you clear your debt, because clearing your debt not only improves your credit score, it reduces your financial stress, and it sets you up for better financial security in retirement. So I've got no problems at all in people that are withdrawing their saved pension funds, only on two conditions: provided you are using that to clear debt, and also you are using that for true emergencies, like you've got an emergency, or you would want to invest in a project that will take you forward, and you've got the skills to be able to operate that project. I've got no problems at all. I've got problems, Tafadzo, of people that will withdraw their retirement savings and use it, for example, to buy the iPhone 16. Tafadzo, you may not be aware, but in this past week, Apple released their iPhone 16, and which is their latest version of this flagship device. I listened to the presentation by Apple. It's quite an impressive device, but my advice is this is not the time to be buying an Apple Watch. I can see some of the features that they are talking about. For example, they are talking about, intelligence. It's quite clear to me that this iPhone 16 does not yet have AI capabilities. It's got some capabilities. For example, I can see bigger screens. I can see their smartwatch with some of the features and the AirPods. But I'm not tempted to go, and I hope you don't use your savings to go and buy the iPhone 16 or to indulge. We don't encourage people to indulge. Remember what we said last week? There was a foods company that was expecting increased sales because of these withdrawals. It's not the time for that. It's time to clear your debt so that you set yourself on a firm financial foundation. The last thing that I would want to talk about, Tafadzwa, one of the things that I do in my spare time is to monitor people that are becoming billionaires. So guess who has just joined the billionaire club? There is this lady, she's a musician. I understand she's also an actress and an executive producer. I haven't followed her work, to be honest, Tafazo. The only time that I really followed her was when she entered the Billionaire Club. So her name is Selena Gomez. Some of you who follow a kind of music, that name may ring a bell, but it didn't ring a bell, to me, because I guess her kind of music is not the kind of music that I listened to. But she is a 32-year-old woman, Tafazo, and it's been interesting to see young people creating wealth and becoming billionaires. So she joins a list of 4 other musicians. We have broken into that billionaire club. So you'd know that Jay-Z is a billionaire. Rihanna, she's a billionaire. Taylor Swift, she's a billionaire. Bruce, Springsteen is a billionaire as well, and she becomes the youngest female vocalist who becomes a billionaire with a net worth of 1.3, billion. So this interested me, Tafadzwa. And I went to just research where her wealth is coming from. Obviously, she makes money from her music. She has done a number of tours, but that accounts for something like 5% of her money only. And even her sales of her music accounts for 2% of her money. But the majority of her wealth, about 80 to 82% of her wealth, is coming from a company, a beauty company that she launched called Rare Beauty. It's a company that she's raising funds for. So she started a beauty company with a name on it, and that accounts for the majority of her wealth. Which leads me to 2 things, Tafazo, because I'm always interested in how people become billionaires. And I'm always interested in advising those that follow us how you can also become a billionaire in this age. Last week, you will recall, or 2 weeks ago, you will recall that we mentioned the opportunity that is being presented in podcasting. I would want to mention another opportunity that I am beginning to see. And let me just start with a prediction, Tafazo. My prediction is that in our generation, we're going to see the first trillionaire. And probably the first trillionaire will be a person with a strong personal branding. So if there is anything that I would want to advise as part of a formula of becoming a billionaire, is that build a personal brand. Because some of these youngsters that I'm seeing, like Taylor Swift, yes, they are musicians, like even Selena Gomez. They are musicians. They've done well. She did well as an actress. But the reason why they're able to leverage their wealth is that they get to a stage where they become a personal brand. So before I hand over to you, Tafadzo, I was reflecting on this, on a formula of becoming a billionaire in this day and age. And it's basically a 5-point formula. Number 1, build a personal brand. Become a recognized, trusted figure that will boost your business opportunity. So even when I look at this, Rare Beauty company that she has come up with, I'm sure it's not different from any other beauty company that you can conceive. But because she's a brand in her own right, her company is going to be much more successful than any company that you can build. So building a personal brand is very, very critical. It doesn't matter what business opportunity you go into. That seems to me to be part of the formula of becoming a billionaire in this day and age. Number 2, invest early and invest wisely. So smart investments in tech, smart investments in real estate, or even cryptocurrencies will lead to very significant returns. Tafadzo, one of the persons that became a billionaire recently is Magic Johnson. Magic Johnson, you would know Magic Johnson used to be a basketball player, but she's got a diverse business portfolio in sports ownership, in real estate. And that is accounted for a net worth of 1.2 billion. So, which leads me to my third point: diversify your income stream. So investing in real estate, in stocks, will help your wealth to grow exponentially. Some of these people that are creating billions of dollars, they invest in different businesses, which is what Magic Johnson has done. Number four, leverage digital platforms. If I look at this Selena Gomez, and even if you look at a person like Taylor Swift, these are people with a significant following on some of these social media platforms. And they are able now to leverage those digital platforms and to scale their business globally at a low cost. And so leveraging on digital platforms is part of a formula of becoming a billionaire. And then lastly, innovate and disrupt industries. And that's becoming very, very important. If I look at many modern billionaires, they have created new industries or they've even transformed industries. It's about innovating in the area of tech, innovating in the area of finance, or even entertainment, because that is what is accounting for the wealth creation that we are seeing in our day and age. So I thought I could just mention, who's becoming a billionaire and how old are they. And this is a young woman who's just become a billionaire, joining the league that I've spoken to you about. But as I hand over to you, Tafazo, have you heard about Selena Gomez?
Thank you for that. I'm sure you'd know that if I think we listen to more or less similar music.
Genre of music, yeah, definitely,
So
definitely.
if you don't know her, but I found it interesting though that you mentioned that it's only 2%, because I was almost thinking of going into acting, was the way the actors and the musicians, you've been mentioning the Taylor Swift and this one. But I then came up with a question that I know so many people have tried to start their own beauty and they've not gone anywhere.
Yeah.
Is it only the platform that she's using, or it's maybe age also?
It's about personal branding, Tafatsu. It's about personal branding. It's about the person behind the business. It's just like Elon Musk. Elon Musk is a global brand in her own right. And whatever Elon Musk starts, as long as his name is behind it and he is a personal brand, it's likely to be successful. And that's exactly what we are talking about, here. Become a personal brand in your own right. And that becomes part of the, formula. Obviously, if you build a great business, it will work in your favor. But what I'm beginning to see more and more is on the importance of personal branding. So that's the point that I just wanted to highlight there, Tafatso. And you are spot on when you actually say that some people have started their beauty companies and they may not be as successful as Selena Gomez. All right, let's move on, Tafatso.
Today, our book of the week is a book titled Skin in the Game, Hidden Asymmetries in Daily Life by Nassim Nicholas Taleb. What is this book all about?
Tafadzo, this book is a very interesting book. Let me ask you another question, Tafadzo. Have you ever heard about this person called Nassim Nicholas Taleb? Have you ever heard of him?
What does he do?
I thought you would say something like that. He's a person that I have followed, very well. Let me put it like this, Tafadzo. He is one of the foremost thinkers in our time. Not only in the area of finance, is the person obviously is a #1 New York Times bestseller. Is the author of the book called The Black Swan. Whoever is in the financial services sector and whoever is a practitioner in the risk management area would know that book, The Black Swan. A black swan is a very rare event, and he's almost coined that term. He's written other books which are also very, very insightful. Like, for example, the one book called Anti-Fragile, Things That Gain from Disorder. It's a book that I have read, very interesting book. He's also written a book called Fooled in Randomness, The Hidden Role of Chance in Life and in the Markets. So to put it very simply for our audience, Nassim Nicholas Taleb is one of the, let's just say one of the, groundbreaking, one of the most, the foremost thinkers in our time. Initially, he wrote books in the areas of finance, but he has used some of his thinking and some of his philosophies to apply to everyday life. And this book is, let's just call it, it's one of his most provocative and practical books. And it redefines what it means to understand the world. So he's obviously applying some of the principles in finance, but he's trying to explain some of the things that happen in the, in the world. So let me just, before I explain to you what this book, really is about, let me just explain to you something that I found, very, very interesting, because he starts from the world of finance and he uses some of these finance principles, which seem to be very complicated, to explain how the world works. Right. So he's talking about some of the, asymmetries, in daily life. For example, he comes to the conclusion that, and he makes many observations about the world. Let me just tell you some of the observations that he makes. For example, he makes observations such as minorities, not majorities, rule this world or run this world. In spite of what you have heard about democracy and what have you, he actually says, look, it's actually minorities who run this world. I thought that was a very interesting statement. Nicholas, Taleb started off as a trader. He started off as a practitioner in the world of finance. He understands risk from a financial world. He uses those concepts to explain, how the world works, even to explain religion. He makes a statement such as, true religion is commitment, not just faith. Right. In other words, how much you believe in something is manifested not only by what you are willing to, not only by what you believe, but what you are willing to risk for that religion, and that skin in the game. So there are two reasons why I have chosen this book as the book of the week. I have chosen this book as the book of the week. Reason number one, because he explores the concept of, asymmetry in risk taking, right? Because that's what we are talking about. He focuses on personal responsibility as well, and he connects the idea of asymmetry to everyday life, to ethics, to decision making, making the concept of asymmetry very relevant, beyond just finance. Right, I will explain the concept of asymmetry, later on. But what I'm trying to persuade everyone who is listening to us is that this concept of asymmetry, which is basically the relationship between risk and return, is not just a finance concept. It's something that, foremost thinkers such as Nassim Nicholas Taleb have applied to explain how decision, making works. One of the things that Nassim mentions in his book is about social justice. And, he says for social justice to work, we need to focus on symmetry and risk sharing. In other words, never believe somebody who does not have skin in the game. Somebody who is not invested in what they are doing, and somebody who will not lose, at all. So that's one reason why I've chosen, this book. It's just to demonstrate that concept of asymmetry in risk taking and in daily decision making. But then there is a second reason why I've chosen this book as well. And, it's the concept of skin in the game, where basically he's basically saying decision makers should bear the consequences of their risk. Because he addresses issues of social justice in his book. He's against banks, for example. You would know what has happened in the banking world. In the banking world, some banks have made profits at the expense of taxpayers. So he's basically making the argument around social justice that you cannot make profits and transfer the risk to somebody else, which is what bankers and large corporations, have done. In other words, you cannot get rich without owning your risk and paying for your own losses. So we need to force skin in the game to correct any asymmetries, that we see. And if we are able to do that, we will achieve social justice in a way that is much better than what laws and regulations can actually, achieve. One of the things that he mentions in this book is, beware of complicated solutions, right? Because somebody paid money to find those complicated solutions. So just to give you an example, Tafadzo, just lifting a simple piece of metal can have wonderful results in terms of building your muscle, rather than the expensive new machines that people are talking about, which will, result in you spending quite a lot of money. So the world is advocating for expensive solutions. We must be aware of it. There. So that's my book of the week. But I generally recommend anybody who wants to understand the world of risk, who wants to understand certain philosophy around how the world works, to read Nassim Nicholas, Taleb's writings, particularly Anti-Fragile, things that gain from disorder. It's a book that has changed, my thinking altogether. But let's just move on to the thought for the day. And in the thought for the day, I want to explain three things. Number one, some of you might have heard a statement that says, for you to make money, you must take risk. It's not true. It's not true. For you to make money, you must take asymmetrical risk, right? In other words, you must take those risks which, are likely to result in an upside or a potential reward that far outweighs any potential loss. So making money is not just about taking risk, Tafazo. There are people that have done very stupid things in trying to make money. And that's the thing that I would want to correct in this presentation. Haven't you ever heard of somebody who starts a business and they use an expression like, I've taken the plunge, right? In other words, that I have taken risk. And then they lose everything that they have had. So the right kinds of risks to take are your asymmetrical risk, which, the risks where your upside far outweighs any, potential loss. And people that make money in this world understand asymmetrical risk, right? So if you're looking for a way up in your life, start taking more of those asymmetrical risks. And you can do so, right now by identifying disproportionate opportunities in your life. So the easiest asymmetrical risk that you can take right now is to simply go through life asking for what you want. And I will explain, so let's just simplify what we are talking about, Tafazo. and I'll give you practical examples of taking asymmetrical risk. But one of the practical examples that I can actually tell you today, it's simply making up your mind that I will not keep my mouth shut. I will ask people if I need anything. There are people that I have come across in this world who are shy, who keep quiet, and they never, ask. For example, let's just say, Tafazo, I give you a product to sell. I've come across people who are very shy and who are afraid to ask a customer to buy their product. The worst thing that can ever happen if you ask anybody to buy your product is that they may reject you. So that's the downside risk, right? That's the worst thing that can happen. But the best thing that can happen is that they can actually buy your product and you become a more confident salesperson. So if you look at it, just asking a customer to buy your product is an example of taking an asymmetrical risk. Why? Because the potential reward is, far outweighs any potential downside. So simply opening your mouth and asking people. So let me give you another example, Tafazi. Let's just say you are buying an expensive product. Just opening your mouth and asking and expecting a discount, in negotiating a discount is an example of taking asymmetrical risk. The worst thing that can ever happen is the person saying, no, we don't give discounts. But the best thing that can ever happen is when somebody says to you, oh, of course, we can give you a 20% discount, provided you do this and you do this and you do that. That's what we are talking about there. So the whole concept of asymmetrical risk is a concept that is, being applied in the world of finance, in the areas of options trading. People make a lot of money by trading options. I've started trading options myself, and I'm getting better at trading options. But options trading is an example of taking asymmetrical risk because the risk-reward relationship there, if you look at the risk-reward ratio, for every, say, 1 unit of risk that you take, you are likely going to get 10 units of return, right? That's asymmetrical risk. Some people, the kind of risks that they take, for every 1 unit of risk that they take, right, the reward that they're going to take is about 10%, 0.1%. That's not asymmetrical, risk. So the right kind of of risks to take in life is asymmetrical risk. And the easiest way to demonstrate that concept is simply ask. By the way, the Bible, Tafazo, also encourages us to ask. Have you ever read the Bible, a verse that says, ask, right? Knock, and the door will be open. If you try to interpret that statement and connect it with what we are talking about, when you knock or when you ask, you are essentially taking asymmetrical risk, right? So don't be afraid to ask God to be a billionaire like Selena Gomez. Some people will say, but I can't be a billionaire. I'll never be a billionaire. Look at where I'm coming from. You're not taking asymmetrical risk. So there is always a cost associated with inaction, not taking action. But there is a reward that is associated with asymmetrical risk. And that's what the concept is all about, Tafazo. Over to you.
Thank you very much for that. Yes, I hope people are appreciating and they're not like, the way I used to feel when I was in my finance class back then, and they were talking about options, and I'm thinking, okay, probably I'll go back to it. So I hope we are together. I'm assuming that you have explained the concept of asymmetrical risk.
Yeah, maybe I can explain it further, Tafazo. I normally want to explain simple things by telling stories, right? So let's just define asymmetrical risk again. That whole concept is about taking risk that will produce a return that far surpasses the risk taken. And once you understand and you get to grips with that concept, it will explain how you can leverage your way through wealth, creation. So taking asymmetric risk is like using a lever, right? A lever to lift up, large objects. That's essentially what it is. Tafadzo, let me ask you another question. Have you ever read the book, The Richest Man in Babylon? The book, The Richest Man in Babylon. Ever read that book? It was written by a
you
guy called
recommended
George
it at
S.
some
Glasson.
stage. You
Yeah?
recommended it at one of the lines.
Yes,
But
yes. I recommended that book.
I think I saw the older version, which is written like King James version of the Bible. So
Did you struggle with the language? Look. For everyone who is following us, you know that when you are starting on your journey of wealth creation, this is one of the books that I recommend in terms of wealth creation. So in explaining the concept of asymmetrical risk, I want to just narrate a story. And this story appears in that book, The Richest Man The Richest Man in Babylon. It's essentially, if you haven't read the book, it's essentially a story about a merchant, a trader. And this merchant is trapped outside the city walls because it was night time and the gates of the city had been closed. So he has gone on his business selling his wares, and he's got gold with him. In those days, they were using gold. So he's got gold with him. So now, because the city gates are closed, he has to sleep outside the city. So he has made a fire, and he is waiting for the gates to be opened in the morning so that he could go into the city. While he's waiting, another merchant, and this merchant is a person who deals with sheep, right? He's a sheep master. He arrives with his flocks. So he sees this fire is got a bonfire. The merchant, the first merchant he has lit a bonfire, outside the city walls. So this other merchant who sells sheep arrives with his flock. It's a flock of about 200 sheep. So he arrives and they introduce each other. And then the sheep master mentions that he lives nearby and he wants to sell his sheep for a good price in the morning. And as they are having this conversation, a house servant of the shipmaster arrives, and he's obviously panicking. So with bated breath, he warns the shipmaster that one of his sons has been gravely involved in an accident. So he's gravely injured. So the shipmaster is worried. So because he's worried, he was also going to sleep outside the city walls. He then tells the first merchants that, look, I can discount my sheep right now. And so I can sell them to you at a discounted price. He says you can get 200 of these sheep, now, so that I can go and see my son who has been involved in an accident. So the first mention, is presented with an opportunity. The reason why I'm telling this story is because everyone who wants to be successful in life, at some stage, you're going to be presented with an opportunity. And let's just call those opportunities asymmetrical risk opportunities. Whenever you are presented with an asymmetrical risk opportunity, my advice is always take that opportunity, right? So the first mentioned knew from experience that if he were to buy this sheep at a discounted price, he would probably make twice the money for the 200 sheep the following morning, right? Then the only problem that he has is that he's got no way of verifying whether the sheep are actually 200 in number. So he's presented with an asymmetrical risk. The reward is that, so the upside is that he can actually double his money. But obviously the downside is that they may actually be 200 sheep. They might not actually be 200 sheep. Maybe they're only 50. Maybe they're only 100. right? So the story is that the first mentioned declines the offer. So the old man then rushes home. They couldn't they couldn't do the deal. He leaves his servant to sell the sheep in the morning. So the next morning, when the gates are opened, the other merchants come out. They bid for the sheep, and the sheep actually fetch 4 times the price that this guy was offered. So the reason why I'm telling this story is that this first merchant was presented with an opportunity to make money. He declined it. He declined. And had he taken the opportunity, he could have benefited. So what I'm simply saying is that in life we will be presented with this opportunity. Don't just plunge and take the risk. There is a certain calculation that you must make, and I will take you through this calculation. The calculation is very simple. What is the worst thing that can happen? That's your downside. What is the best thing that can happen? If the best thing that can happen, which is the potential downside, far outweighs the worst thing that can happen, then it's an asymmetrical opportunity. Take it, right? So the first merchant lost an opportunity to profit greatly because he did not take the asymmetrical risk. I wanted to tell 3 stories, Tafazo, but let me limit myself to 2 stories. The other story that I want to narrate is a recent story. Tafazo, you would know that last week I was in Malawi. I went to Lilongwe, then I also went to Mangochi, which is part of the lake in Malawi. Whilst I was in Lilongwe, I was staying at a lodge called Kumbali Lodge. It's a very nice lodge. I understood that when Madonna, goes to Malawi, Madonna, the musician, she's been adopting babies from Malawi. Whenever she goes to Malawi to adopt babies, she actually sleeps at that lodge. It's called Kumbali Lodge. It's opposite the State House, just close to the State House in Lilongwe. So I got to talk to the guy who owns Kumbali Lodge. At Kumbali Lodge, he's got a banana plantation. He's also in the process of building a game farm. Whilst I was there, for the 5 days that I was staying there, I actually saw him offloading animals because he's actually building a game farm in that area. So he's developing the area. He's got a banana plantation. He's developing a game farm. He's building a large castle there. And he operates a conference center where I was teaching on ESG. So I asked him his story. His story is very simple. He's a South African guy. He went to Malawi as a poor person. He was working for a tobacco company. While he's working for a tobacco company, he got to understand that there was a piece of land that was being sold, which is the piece of land on which he's building his business. It's prime land in Malawi. I think now it's worth millions and millions of dollars. And it's given him an opportunity, obviously, to make money and to be financially independent. So the story goes something like this. He went there as a poor person. In fact, the reason why he went and accepted the job in Malawi is that he owed his father money, actually. So he wanted to repay the loan to his father. But whilst he was there, he just read in the paper that the government was selling a piece of land to farmers. And he had the farming experience. He knew how to farm. He just didn't have the money. So he didn't have the money, but he heard that the government was selling a piece of land. Now, there were 2 problems. Problem number 1 is a foreigner. Problem number 2, he doesn't have the money. So the wife goes to him and he says, you've got the farming skill. Why don't you just put a tender to buy this piece of land and make proposals on how you can pay for it? But sell yourself as somebody who is an investor, who's got farming skills and who can make a contribution, because this was a piece of land that other people had tried to farm on and to do productive things on, but they had really failed. So what later on happens is that he travels to Blantyre to put in a bid. He didn't want to put on a bid, but it was the wife who convinced him. And the wife basically said to him, what are you going to lose? If you put a bid which is poor, the worst thing that can happen is that they are going to just laugh at you and dismiss your bid. But the best thing that can ever happen is that you will actually get the bid and they will believe your story. The rest is history, Tafazo. He now owns the piece of land and is one of the richest people in Lilongwe, employing hundreds and hundreds of people and developing that property. So that is an opportunity. That is an example that I have come across in this past week of somebody who was able to take asymmetrical, risk, Tafazo. And that's what it's all about. The last thing that I would want to explain before I hand over to you, Tafazo, is that whilst there are positive real-life examples of taking asymmetrical risk, there are also negative real-life examples. So let me start by giving you 6 negative real-life examples of people who don't understand asymmetrical risk and they take risks which are not asymmetrical. So number 1, driving a car without insurance. There are so many people who drive cars and they've canceled insurance. That's a negative real-life example of somebody who doesn't understand asymmetrical risk. Because if you look at it, the downside is larger than the upside. What is the worst thing that can happen? You can be involved in an accident and the car can be a write-off, right? What is the best thing that can happen? You can save on monthly premiums on insurance. Similarly, everyone who skips who skips insurance payments to save money, that's not being wise. So don't do such things in your financial journey. It's plain stupid, right? Secondly, not saving for retirement. There are people who say, let me live for the now. After all, we are all going to die. That's a negative example of not, understanding asymmetrical risk. Number 3, texting whilst you are driving or speeding in traffic. Have you ever been, driven by somebody who is texting whilst they are driving? Never do those things, because what is the downside? The downside is that you may be involved in an accident. What is the upside? The upside is that probably you will respond to a message that is coming. But if you look at the upside does not outweigh the downside. So in life, you will come across certain decisions where you will need to apply this concept. Number 4, ignoring minor health issues. So there are people, particularly they are above the age of 40. You've got a minor pain and then you ignore it. You actually think that you are still a young person. And then it later turns out, after 10 years of ignoring that pain, that you're actually experiencing stage 5 cancer. That's plain stupid. Overusing credit cards. Remember what I said to you, Tafazo. Most households are experiencing, debt issues, distress in their finances. Anybody who goes and overindulges and uses their credit card is not applying the concept very well. And this is a big one. The last example that I will give you, procrastinating on important tasks. So you've heard Themba talking to you about opportunities of creating wealth. And then you say to yourself, I will do this later on. Whenever you procrastinate on an important strategic task, that's a negative real life example of the misapplication of asymmetrical risk. So I've given you 6 examples, Tafadzwa, of negative misapplication of asymmetrical risk. Let me give you positive examples, right? In addition to the one that I've given you. Number 1, if you had invested in Amazon in 2001 during the .com crash, right, and hold on, if you had held the stock up to today, you would have made 3 times your initial investment. So, for example, if you had invested 10,000 rands in Amazon in 1999, you would have, accumulated 3 million by today. That's an example of asymmetrical risk. You've got a small amount that you invest, and then, that's your risk. The risk is that you may lose that 10,000. But the upside is the benefit that you can get. So once presented with an opportunity to buy Amazon shares and holding on to them, that's a positive demonstration of asymmetrical risk. Google, when they announced their IPO, when they listed their shares, on day one, they created 900 instant millionaires. So sometimes you've got an IPO and people will say, will I really make money on the stock market? Look, if you've got 100 rands, the worst thing that can happen is for you to lose that 100 rands. But the best thing that can happen is that maybe this is a tech company. So the decisions that people make in life is that whenever they are presented with an opportunity, they look at the opportunity, and if it's an asymmetrical risk opportunity, they actually take it. These concepts applies to career decisions. Sometimes in your career, you may be presented with an opportunity to take on a new project at work that involves a higher level of responsibility. You're going to gain a new skill set. Whenever there is a new project, it's a new initiative in the company, take it. It's an asymmetrical risk opportunity. The same applies with learning and education. It could be enrolling in a course that will take you far. Don't look at the cost of the course. Look at what is the potential upside that I may benefit. Same thing with fitness and health. Starting a new exercise routine and being disciplined with your health. I'm just beginning to think of a negative example of asymmetrical risk. And I hope to those of us who are listening to me, nobody does this. Whenever you are smoking tafadzwa, it's a negative example of asymmetrical risk. That's why I do not tolerate anybody who I coach, smoking. Because if you look at it, what is the downside of smoking? You are destroying your lungs. What is the upside? The upside is you're going to have temporary enjoyment. You're going to, manage your stress. But if you look at smoking, for example, there will be words written on the cigarette box. Smoking may damage your health, or smoking may destroy your health. People ignore that because they are not trained to take asymmetrical risk, right? Let's continue with the positive examples of asymmetrical risk. Networking and relationship building. So it could be attending a networking event. There are people who say, I don't like to network. I don't have the clothes to go to a dinner. That's the downside. But what is the upside? The upside is that you can actually meet a destiny helper when you go for a networking opportunity. So go and network. A side hustle, right? Starting a small side business like freelancing, it could be an online store. Obviously, the downside is that you may lose your money. But what is the upside? The upside is that you may create a successful entrepreneurial venture. So to me, it's a no-brainer on whether you should be involved in a side hustle or a small business. Why? Because it's an asymmetrical risk opportunity that you are presented with. Home improvement. Say you've got your home, minor upgrades to your home, such as painting, landscaping, your garden. Because if you, all of those DIY projects, because if you just take the weekend to do painting on your home, what is the downside? The downside is the cost of material and the time spent on the project. But what is the upside? The upside is increased home value, improved living conditions, and personal satisfaction. So I don't understand for the life of me, somebody who spends and squanders time going on a drinking spree, going on things that do not actually present asymmetrical risk opportunity. Travel and experience, right? There are people who say, I'll never go on holiday, I'll never travel, right? Traveling and just going out there, it's an asymmetrical risk opportunity, because taking a trip or experiencing something new, like learning a new culture, learning a language, The asymmetry there is, if you look at the downside, is the financial cost, is the time commitment. That's very small compared to the upside. That's why you see that very successful people go on holiday, they travel, they experience the world. You're just working hard and you're like, I don't take any leave, I don't take holiday, I don't go on holiday. You just stay in your own corner. That's why you cannot progress financially, because you don't understand the asymmetrical risk, the risk-reward relationship. Let me give you another example. Social media and personal branding. Today, we've been talking about how, and this is my own prediction, that in a few years' time, we are going to hear people being called trillionaires. Think of this individual that we've been talking about today, Selena Gomez. She is now a billionaire at the age of 32. If she up to 90, obviously that wealth will compound over time exponentially. And who knows, if she continues doing what she's doing, she will become a trillionaire, definitely. And I've given you a hint today. Brand yourself, invest time in personal branding. We're basically talking about starting a personal blog. It could be a YouTube channel, it could be a social media page to share your experience. Anybody can do that. Don't use your phone to just consume content on Facebook and you're just laughing at the reels that people are posting. While least you can actually take the opportunity, because you can use the same amount of data that you are using to go through the reels that you go when you consume somebody's content, to actually take the time to brand yourself, right? So what is the downside there? Well, the downside is the cost of your time. But the potential upside is that you can actually become an influencer. Because the reason why these young people like Taylor Swift, right? For your own information, Tafadzwa, there was a debate in America, a presidential, campaign debate, and Trump was going, against, Harris. And soon after the debate, Taylor Swift just tweeted and endorsed, Harris. And who knows what can happen then? Because these people are actually influencers. So the potential upside is that you can actually build a following and become an influencer and use your platform for business opportunity. So creating a personal brand has got minimal initial risk. But if it's successful, the upside could create new career opportunities. So instead of just complaining and waiting for a destiny helper and talking about one day God will bless me, there are a lot of asymmetrical risk opportunities that are being presented to you, which you can actually take. Maybe you're a young person, and let me give this example to young people. You don't have a job, you don't have an income, but there is always an asymmetrical risk opportunity that is being presented to you. And one example of an asymmetrical risk opportunity that I can give you is charity and volunteering. So you can actually volunteer to work somewhere, right? Volunteering your time or donating your time for a cause. What is the asymmetry that we are talking about there? If you look at the downside is minimal, right? You're going to lose some time. Maybe if you are donating, there will be a small financial contribution. But what is the upside? The upside is personal fulfillment. It's connecting with others. It's making a meaningful impact in community. So when you look at the risk-reward equation there, you can actually see that charity and volunteering is an asymmetrical risk opportunity that is presenting. Let me give you the last example, Tafadzwa. And Tafadzwa, as I give this last example, I see that our hour is up. Probably we can continue with this topic next week. We've laid the foundation. I think our audience really know what we are talking about. What I would want to do next week is to explain to the audience how you actually identify the asymmetric risk opportunity. Because the thing about it, Tafadzwa, think about this first that I mentioned from the richest man in Babylon. The thing about asymmetric risk opportunity is that at the time that you are making that decision, you don't have perfect information. I'm sure that this first merchant, if it was daylight and he could count the number of sheep and verify that the sheep are actually 200 in number, he would have gone for the deal. The thing about asymmetrical risk opportunities is that sometimes you don't have perfect information, but you just have to make a simple calculation. And the simple calculation is, what is the worst that can happen? What is the worst that can happen? If I hear all this sheep bleating, and I just say, maybe this sheep, maybe the worst thing that can happen is that they are 100 in number. Maybe it's actually half the number that this sheep master is actually talking about. If I work with 200, maybe I will lose the 100, the price associated with the 100 sheep. But if I'm able to sell them at 400 times, I'll still make my money, right? And that's the calculation that you need to do. And once you understand that risk-reward relationship, you're not going to do stupid things in your life. I'll give you other stupid examples, Tafadza. Maybe let me give you two, right? One is automating your investments, right? Setting a debit order on a monthly basis, right? So maybe you want to save 10% of your income every month, right? That's an asymmetrical risk opportunity, right? Just setting up the automated debit orders. The downside is very small, so it could be, let's say you set a debit order of 100 rands every month, right? Surely all of us waste 100 rands every month. So the downside is the 100 rands, which is the small regular contribution. But what is the upside? The upside is long-term wealth creation and financial security, right? So it's a no-brainer, colleagues. It's a no-brainer. If you are on a journey of wealth creation, just set those small debit orders on a monthly basis. Don't have this idea of one day I will be rich. No. Asymmetrical risk opportunities are being presented to us. The last example that I will give, Tafadwa, and this one is controversial. I'm saying this just to provoke our audience and our viewers. Some people go into marriage. When you're going into marriage, just do this risk-reward, computation. What is the worst thing that can happen? Because once you understand the worst thing that can happen, you are going to take steps, right, to minimize that downside. That's the beauty about applying this. Because what is the worst thing that can happen? Because sometimes when you go into an asymmetrical risk opportunity, you don't have perfect information. That's the thing. Nobody takes advantage of an asymmetrical risk opportunity and they've got all the information. So sometimes you have to go with this guy or with this lady. You don't have perfect information about who they are, whether what they are saying is actually true or not. But when you are taking an asymmetrical risk opportunity, you say to yourself, what is the worst thing that can happen? What is the best thing that can happen? If you understand the worst thing that can happen, how do I minimize that downside, right? That's why rich traders, as part of minimizing the downside, they always trade with stop losses. I'm now doing options trading, and one of the things that I have learned is the idea of a stop loss. Minimize your downside, maximize your upside. And many people go into relationships with a downside that has not been mitigated. So simple things like, let's go for an HIV test. I want to know you more. Let's date for a longer time. All of those things are minimizing your downside, right? Let me be sure about the contract that I sign. Are we being married in community or out of community of property? Because those are the questions that you need to ask as part of minimizing your downside. What I see sometimes is people just take the plunge. And then when problems develop later on, you begin to understand that, look, life is not just about taking risks. Life is about taking calculated risks. I'm sure somebody somewhere has mentioned that statement to you, that it's about taking calculated risk. If there is somebody who has mentioned that to you about calculated risk, that's exactly what they were talking about. Tafadzwa, I may go on and go on. I'm excited about this topic, but let's complete it next week.
Thank you very much for that. And as I mentioned, we will continue next week on identifying asymmetry in life. If you want to get hold of Themba, you can connect with him on his LinkedIn, Themba Mazibuko. You can also contact us by writing us to Tafadzwa Mazibuko Speaks.co.za. You can also subscribe to our YouTube channel, The Dream That Is Worth Fighting For. And everyone who has joined us, we really appreciate your support. Thank you. Let's go and make decisions based on positive asymmetrical risk. Let's grow together. Your dream is worth fighting for. Cheers.